Ever bought a gadget that promised to change your life, but the only thing it changed was your mood when it broke after a week? Like that fancy blender that struggled with ice. Which can help avoid those mishaps. Right now, get a digital annual subscription for half the price, just £39.50 for the whole year. That's less than 80p a week, cheaper than that daily coffee habit. Which offers expert, independent reviews on everything from kitchen appliances and cars to mattresses and TVs. Every product is purchased and rigorously tested in the lab to provide honest verdicts, so no more regrettable purchases. Enjoy access to the Which app, the Ask Which service for personalised buying advice, and the 11 digital editions of Which magazine throughout the year. Half price, expert advice, and no buyer's remorse. But hurry, this offer won't last long. Head to which.co.uk/podcast offer to get a digital annual subscription for just £39.50. Offer ends 12th of March.
Welcome to the Which Money Podcast, your weekly hit of money news and personal finance hacks to help make you better off. I'm your host, Lucia Ariano, and here's what's coming up this week.
I am aware of people that have made significant money from being serial switchers, and I'm talking over £1,000 from switching again and again and again.
Some of these monthly fees can be a lot, and it's like, okay, you're going to get some cash for switching, which probably would cover your monthly fee for a couple of months, but you're still going to have to keep paying for that after. If you're not really going to get the benefits of that account, there's really no point switching.
Now, switching banks is a topic we mention in passing on the podcast all the time, but rarely do we get into the nitty-gritty of it all. Well, today that changes, as we'll be talking about the switching offers that are available right now, going deep into how the switching process actually works, and exploring if you might really be better off sticking with your current provider. Well, to explain more, we've got with us Which Money expert and podcast regular Grace Witherden.
Hi, Lucia.
Hi, Grace. And also finance content creator Gabriel Nussbaum, better known as That Money Guy, another familiar voice on the show. Hello, Gabriel.
Hello, thank you for having me.
Well, thank you both so much for joining us. Well, shall we start from the very top then? For anybody who doesn't know what switching is, because I know I've got a few friends who've never switched, they wouldn't know where to start. What are we talking about today?
So today we're going to talk about switching your bank account. This is now a really easy process thanks to something called the Current Account Switch Service, or the CAS. And yeah, basically lots of banks will offer you money if you switch to them. So we're going to discuss whether you should do that, if that's worth it for the money and the perks, or if you should stick to where you are.
So we're talking about your current accounts. This is your everyday account. I mean, is this something that you've switched before?
So I've gone through most bank providers. I feel like I've tested them all the big high street names, all the digital banks, just to really kind of find the one that is perfectly suited towards me. I think when it comes to a lot of financial products, I say this a lot, loyalty should really go out the window when it comes to this stuff. You should be looking for the best provider that works for you. And if they stop being the best provider for you, you should move, and you should move without any guilt whatsoever.
So is that why you're doing it? Because you want to find the perfect provider, or are you doing it for the incentives? Because as we'll go on to mention, there could be £150 on offer here, for example. So is it the incentive or to find the perfect bank account?
Oh, it's a balance. I would lie to say the incentive doesn't play a massive part of it, but I would never utilize just the incentive to switch to a rubbish bank. I'm not going to call out any names here or put anyone under the spotlight, but the incentive should just be the thing that pushes you over the edge. It's kind of incentivizing you to actually take action rather than being the sole decision you pick a new provider.
Very sensible. Well, let's talk about the process then, because for anybody who hasn't done it before, it might feel a bit daunting. You've got however many direct debits coming out. How exactly does the process work, step by step?
So it's actually really simple. You would go onto your new banking provider, you would sign up for their current account, making sure that you've obviously got all of your details, ID, all the verifications you need to open a bank account in this country. And then a lot of them will just say, are you switching from a different bank provider? And you would simply tell them the bank provider that you currently have, and they would do all of the rest of the work for you, they being the current account switch service that we've mentioned before. And within 7 days, or it takes up to 7 days, everything, including your direct debits, the amount of money you have in there, all of the complicated stuff that would take you a long time to try and refigure out to move across, would be done for you and be sitting in your new bank account within, like I said, that 7-day period.
And they also close your existing account for you.
Useful.
So yeah, it really is all tidied up quite neatly.
And I mean, we've heard that you've switched before. Grace, have you switched as well?
So I have switched a while ago. I haven't switched recently because I'm in the process of buying a house. And it can briefly affect your credit score when you switch, when you open a new bank account. And I am doing everything I can to keep my credit score stable.
Okay.
So that is why, and it's annoying because I have seen some really good offers in this last 6 months. And I'm keeping my eye on some offers because I'm hoping they're still going to be around in a couple of months, or at least some better ones will appear. So I'm not a serial switcher, but I feel quite familiar with the process because I do regularly pick the best deals in our website.
And having been through the process, both of you, can you vouch for it being, quick and easy as it should be?
Honestly, it really is as simple as the instructions they kind of put on the tin. And I think it's something like 99% of bank providers now are part of the current account switch service. So that really should not be an obstacle.
Yeah, I saw the list earlier of all of the providers, and I really was trying to think of a niche one that wasn't on there, and I couldn't.
Couldn't figure it out.
I couldn't pick one that actually wasn't on there.
And if they aren't on there, is it an account that you really want to be switching to? There's probably a question mark over that.
So if we put, the quest to find the perfect bank account to one side and just focus on the incentives for a moment, what could our listeners be getting if they switched current accounts right now? Grace, you've got the list.
Yeah, so there's 4 deals available right now, with the highest paying up to £175. So that's what the new provider will give you simply for switching to them. So I'm going to try and run through the deals briefly. So we have First Direct. They'll pay you up to £175. We see this deal quite a lot. It's sort of a long-standing deal. It does go away for periods, but often comes back due to popular demand. So it's usually there. And basically, yeah, you'll get up to you'll get £175 for joining. First Direct is also a Which recommended provider, so that's also useful to know. We really rate its customer service, but it's also an online bank. It doesn't have any branches, so again, if you want in-branch banking, probably not worth switching. The next deal, Nationwide Building Society, is also offering up to £175 if you join. Lloyds Bank is offering up to £175 as well. This offer actually ends 1st of April, and they are going to give you £175 if you open a Club Lloyds account. This account has a monthly fee of £3, but this is refunded if you pay at least £2,000 into the account every month. It also applies to some packaged accounts you can get. So you can get a Club Lloyds Platinum account and a Club Lloyds Silver account. And both of those ones are packaged bank accounts. And the Club Lloyds account itself comes with a lifestyle benefit. So you can get, I think, Disney Plus or cinema tickets or a magazine subscription or some money off coffee. So that's it has a few perks to it. And then the Cooperative Bank is offering £155. You'll initially get £75 just for switching, and then you can earn £25 per month for 3 months by meeting certain criteria. So you need to deposit at least £1,000 each month. You need to make at least 10 card transactions and switch of 2 active direct debits. So all quite simple, usual banking stuff that you'd be doing. And that's all our deals at the minute. But in the past 6 months, we've seen ones from NatWest. We've also seen ones from Santander, and we've also seen RBS. So I think the usual providers, if you wait long enough, will usually do a deal. It might just be that you have to wait a couple of months to see one from a provider that you're interested in. But I don't think there's been many periods this year where there hasn't been any deals.
And I mean, we've mentioned this term serial switcher a couple of times already. So for anyone not familiar with that, because I'm not sure if it's something that you would know immediately what that means, but can you just go from one to another and get the incentive and keep doing it? Or is this loop ever going to stop? Can you return back to the First Direct deal that, as you say, they keep putting out?
So unfortunately, most of the providers, as part of their T's and C's, they will say, actually, you can't get this switch incentive if you've had an account with us since, might be 2020, might be 2021. But they're usually ways to like catch you out from benefiting from the cash regularly. So there's always usually something saying you can't have had an account since this period. It might be that you have to wait for a number of years before you can benefit from the cash. And sometimes it can catch you out because it might just be with the banking provider. So obviously First Direct is actually owned by HSBC. So it means that if you'd benefited from either of them, that counts. And things like Lloyds Bank, Bank of Scotland, and Halifax are also the same brand. So there's other things like that you need to watch out for. But yeah, there are ways to do it, but there's usually is like an exclusion of like a couple of years that you need to have benefited from the cash.
So, I mean, Gabriel, you were nodding then. As Grace was saying, there are ways to do it. You were nodding. Is there anything
you're
you'd
the
add?
serial switcher.
I'm not a serial switcher at all. I actually have been with my current account provider now for a couple of years because I'm really happy with them.
You found the perfect one.
I found my perfect match for now. For now. I always say for now because you never know in the future. But I am aware of people that have made significant money from being serial switchers, and I'm talking over £1,000 from switching again and again and again. Now, as long as you are reading the terms and conditions and abiding by the rules, so the rules might tell you need a number of direct debits, like we mentioned, a minimum amount of deposit going in, so you might have to have a salary being paid in of £1,000 a month for 3 months before you even get paid out that money. But as long as you are kind of covering all of the check boxes they're asking from you, there's no reason why you can't get that money and move on to the next one and the next one and the next one, again, making sure you're aware of which ones will work and which ones won't work. The only thing that you probably really want to be aware of in those scenarios is your credit score, because moving from account to account to account will have some kind of negative impact on your credit score, because every time you open a new bank account, you get a hard credit check, and that is something that does sit on your account. But if you're not someone too concerned about your credit score because you've got no reason to utilize it in the near future, we're talking a couple of years, maybe 5-6 years or something like that, then that might be something that you're not too bothered by, and the switching benefits of getting, £1,000 plus potentially might be worth it for you. So yeah, there are definitely people that do it. And there is one technique that's out there that isn't something per se I'd recommend, but it does exist, and it's called having like a mule account.
A mule account.
And this is something that's mentioned, and there is no limit on the number of current accounts you can have. So some people do have a main current account, and then they have a mule current account, and the mule account is used to be their switching one. So their main one is the one they'll utilize everything in there every day. They'll keep it for a long time. And the mule one, they'll take advantage of all these offers and have that one keep moving around. Again, not something that I would currently do because I'm quite protective of my credit score, but it's a tactic that exists out there and that people take advantage of.
And also, some of these deals are also available to existing customers. So that could mean that, let's say, for example, I have a basic Santander current account. And I also have another current account with a different bank. Let's say, for example, I have an account with Nationwide. Now, if Santander are suddenly doing a £200 offer, if I moved their Edge account, which is their cashback current account, I could switch my Nationwide account and switch to Santander. So often when I say things like, oh, it's available to existing customers, sometimes people get confused and they think, oh, they're just going to pay me to, stay with the account I have. It's free money. And it's like, no, you do have to be like closing an account with another bank. You can't they're not just going to pay you another £200 if you already bank with them. But if you are someone that has, already has 2 different accounts with different banks, then just because you're already a customer with that bank that you want to switch to, a lot of them do open the deals up to existing customers as well.
I do quite like the idea of a mule account. I suppose that would, if you are trying to find the best account for you, you could find your favourite account and then keep your mule account running.
The thing with the mule account, I'd love to hear from someone that is a serial switcher does this. Because lots of them have the terms and conditions, like you need to have £1,000 going into this every month, you need to have the active direct debits, you must be like a really organised individual to keep track of like the money
at all.
The money that needs to go in there. But then you obviously are using another account that you love and you don't want to give up. So
precisely, like a lot of these switching deals have really quite difficult conditions to go and meet. And if you're, you've got your standard account, which has most of your money going in, most of your direct debits going out of, and then you have a second account that's also got a significant amount of money going into on a monthly basis.
Yeah.
And direct debits, like I said, you have to be quite organised on top of things.
I suppose you could have your salary going into your main account, going into your mule account, going back to your main account?
Yeah, so
is that what people do?
Well, my boyfriend a couple of years ago did take advantage of one of these switch offers. He didn't want to stop using his main account, but he needed his salary to go into the new account he'd switched to. I think this must have been a couple of years ago before like people used online banking as much as we do, because he used to get paid and then withdraw all of his salary in cash and then walk down the high street and take it to his other bank and pay it in.
I feel like we're now describing a bank heist at this point.
This was definitely like 5 years ago or so, and he said I was always nervous that one Thursday of the month when I know I'd have my like salary on me in cash and I'd have to like walk it 5 doors down to like the other.
Thankfully we don't have to do this.
So yeah,
now.
Thankfully, I mean, he still does that, but now he does it on his banking app.
Well, if you're all listening and you are a serial switcher, please do get in touch. I'm looking at our producer. We'll put an email address in.
It'd be great to hear from someone that's like, they've just got a few like tricks.
Anyway, after the break, we'll talk about the flip side, what could happen if you switch too often and why you could be better off sticking with your current provider. We'll be back after this.
Hi there, James Rowe here, presenter of the Which Cars podcast. Join me and the Which Cars team as we cover the biggest motoring stories, including our exclusive research into car reliability.
When 5 to 9-year-old cars break down, they spend on average 4 days off the road. New to 4-year-old cars spend 4.8 days off the road. Now that might not seem like much in the general scheme of things, but that's a 20% difference. And that could be the difference, for example, if you break down on a Monday afternoon between getting your car back for the weekend or having to wait into the next week to having it repaired.
Should you buy a used car rather than a new one?
Unless you're desperate to get a car in exactly the colour or specification you want, there are plenty of low mileage used cars on the market with significant discounts on their new price. And if they're from a brand, say like Toyota or MG, which offer long warranties, then it can actually be quite a good option buying used, because you'll still have that manufacturer cover behind you.
And why are car headlights so bright nowadays?
Car manufacturers want to make life easier for the driver, so they add these LED or laser headlights that illuminate the road ahead like never before, which is great if you're driving a car. Not so great if you're on the receiving end coming the other way.
To listen to the full podcast, head to which.co.uk/cars podcast. You have to be a Which member to listen, but you can get a membership for 50% off the usual price. All the details are on that page, which.co.uk/cars podcast.
Welcome back to the show. So, Gabriel, let's go back to what you were saying earlier about not just switching for the cash bonus. So you haven't switched for a while. You found what we might call your perfect bank account for now. What's so good about it?
So for me, a bank account that is perfect is just a bank account that you don't have to think about. There are so many out there that just give you headaches with just doing the everyday things that a bank account should do. Sending money, receiving money, getting your direct debits going out, organising just the little things. So I'm not so passionate about all of the little perks, cashback, discounts at different retailers that a lot of bank accounts do offer. I just want my bank account to work and to work without a headache. So that's how I kind of use that, or how I kind of found the one that I currently use. But I do have several. So I do have a main bank account, a second one, and a digital one, but the main one is the one that I've been describing in this scenario.
I love that. To me, having more than one current account feels a bit alien. Maybe that's, am I unusual in that respect?
Yeah, I do have 3 at the minute, but one's a mule.
You've got a mule.
Yeah, the second one is my digital challenger, no fees abroad, and then I have my main one, which I owe nothing to. I mean, I should switch it because it hasn't, it's one of those things like loyalty doesn't actually pay, but I don't know why. I've been with this since I was 16 and something is stopping me from moving.
I've kept open my oldest bank account because that's actually something that's quite good for your credit score, to have a history with one bank provider. So the bank account that I opened when I must have been like 12 or 13. I say I opened, my parents probably opened it for me. But that's the one I've kept open. It's not my main one anymore, but it just sits open because I know that that's a really good thing for my credit score. And then my other one is, like you mentioned, just a digital one. It's good for traveling. It gives you really good exchange rates. It's good if you want to do budgeting and a bit of pooling your money for your savings, which a lot of main bank accounts are still kind of getting into. But yeah, that's the only reason I have a few. I'd be absolutely fine if someone walked up to me on the street and said, I've only got one. Is that okay? Yeah, it's probably fine. I'm just giving myself a headache.
So just having a bank account sat dormant with nothing in it, but you've had it for, say, a decade or more, that's good for your credit score.
Yeah, I mean, there's a number of things you can do for your credit score, but just keeping something open for a long period of time, again, just shows that responsibility. It does have a little bit in it. I think like some of my friends still have that as the account they transfer money to. So every so often it gets a bit of money and then I'm like, who's sending money in there?
Oh, because they've got those details.
They've got the old details and I can't be bothered to update them.
They haven't got the Monzo yet. Or
They haven't got the Monzo yet, or you can now send like links to people to transfer you, or can you just
QR
PayPal
code.
me, mate, or something like that. But yeah, it can have added benefits for your credit in the long term.
And Grace, we've started talking about credit score already. We did in the first half. I mean, do you want to talk a little bit more about the implications then of being a serial switcher on your credit score?
Yeah, so because most current accounts have an overdraft facility, that's why most banks will run credit card checks because of this, that, you know, you have got that facility to borrow. And when they run these checks, either, you know, a hard search or a soft search, the hard search will leave a trace on your credit report. And this is something that other lenders can see. And it does push your score down, but only temporarily. I think when I opened that Mule account, it went down maybe for about 6 months, and it didn't go down by much. But it sort of needs about 6 months to stabilise. So if you are applying for a new credit card or a mortgage or car finance, it's best to wait until you've secured this before switching your bank account. And that's why I haven't done anything, within the past 6 months, really, because I've been trying to keep a really steady score. I've kept all my accounts open. Even one of my credit card providers was like, you haven't used your card. I think we're going to close it. And I was like, no, please don't close it. I haven't used you, but I want you to stay open. I don't want my limits to change and my credit limits to change. So yeah, it's just something that you could take into account. But, you know, as we were saying, like if you actually have not got anything like that planned, there's no reason why you can't keep switching. It doesn't matter. It's just sometimes people will have those kind of things on their horizon that it's just something that you might want to watch out for. But usually the searches only have minimal impact. But it's just like one of those things that's like, just so you're aware, like maybe check.
If you really want to be safe, I believe that things last on your credit report history for up to 6 years. So if you have been moving around a long time, let's say, you know, you're 18, 19, 20, and this is a great way to make a bit of pocket money or cash on the side, and you're thinking, I'm never going to use or need a large amount of credit for the next 6 years of my life. And by the way, consider things like applying for credit cards as well, because they do a hard credit check. So just there are things that you might want to be aware of in the next 6 years, but you might think to yourself, I'm not going to be borrowing a lot of money. My credit score isn't really too significant right now. And 6 years is an absolute fine time for me to wait. Then you're being super precautious. But like we said, 6 months normally is enough time for you to
mine came back up. But also, like, you know, credit scores are influenced by so many things. Like, you know, if your change of address, you know, like I also changed address, went down until I'd been on the electoral roll 6 months. So they change so much. You know, you like pay off your card for the month, it changes. So it's just one factor, but it is like a factor that you can control if you can't control that you're having to move house, or this is something that you can control, because sometimes you can't help the other things.
And so your credit score then is one thing that you can consider. While we have this kind of sensible hat on, you know, if there are any other things that we should be considering, you know, if we're being sensible and precautious?
So I've already mentioned not just switching for the cash incentive. Let's say you're hearing about this for the first time, you hear a great rate, you're like, I'm just going to switch because it's an easy £175. And then you end up with a bank account that you're really not happy with. Of course, you can switch back. And I've said it's quite simple, but it is an added extra level of effort for you to go around doing that. And it might be a headache that you don't want to kind of cause yourself at this point. Like we said, the impact on credit and stuff like that. So if you're with a bank account that you are completely happy with, switching might not be the optimal decision for you. Another thing to be aware of that we've just been touched upon, which was the overdrafts. So different banks have different rules with overdraft allowances, especially if you've come off like a student bank account, which have really generous overdraft allowances, and you're moving to a bank account or switch to a bank account that has less generous overdraft bank allowance, and you're switching with an overdraft. You've got to be very careful at that point because, for example, you might suddenly start paying a large amount of interest on an overdraft because you've moved to this bank account, which wipes out that £170, £150 benefit that you're getting in the first place.
Yeah, and I also think what works for you, because as we said, some of these switching deals, they don't have many branches. They might not have like a branch near you. So if it's like really important for you to be able to like walk into your local bank and speak to a person, or if you really like the customer service that you get, or if you really like the app and you know where everything is and you're comfortable, sometimes you don't want to like switch and get something else and learn something else. Like I'm so familiar with what I like. It's like I know where everything is on this app, and then I have to I downloaded this new app for the Mule account, and I was like, I don't know where anything is. I don't know how to use this. So I think that should be a consideration. We always look out for customer service as well at Which, and as I mentioned, First Direct is a recommended provider. Other Which recommended providers actually are Monzo and Starling, and they never have switch offers.
They're
So make that maybe
abilities, aren't they?
they don't need to draw customers in. So yeah, I've never seen a Monzo or a Starling switch offer. So that just goes to show that, if you're looking for these are our Which recommended providers. Other people have, different opinions, but I'm just saying that there are two that we think are really good. They don't offer any incentives, so you can still switch to them. Monzo and Starling, you can switch to on the current account switch service, but you won't get any incentive. So, I think we only ever see the same high street banks doing the incentives. It's the same ones that always come up.
Yeah, it's worth considering if you wanted to open a digital bank, for example, is it worth switching or is it worth simply just opening a fresh account with them? Because that is an alternative option. If you're switching, you're closing down your old bank account, and that might be something you want to seriously consider if you're switching for a non-incentive reason. You could just have two accounts at the same time.
Yeah, no one is stopping you. And then also then you have got a potential future Mule account.
Absolutely, that you can keep open. And I think the last thing is, well, from me at least, is what does it actually require for you to get the benefit? So people switch because they see the headline rate. They don't ever look at the little asterisk underneath that says, you are required to pay £3,000 per month into this account for the next 12 months to get this offer. Plus, on top of that, have 3 direct debits that are leaving this account. Plus, on top of that, A, B, C, D, E, F, G, A.
Yeah.
And then they switched account. They've gone through the effort and they're wondering why this money isn't landing in their account. And then they realise that they haven't got all of these things. They are really clear. It's very easy to figure out what this small print is. It's not like I'm asking you to read a classic T&C, which can everyone just, scrolls to the end and clicks I accept and moves on with it. They're really easy to understand. Most websites that are describing all the switching offers will have the T's and C's within them. But if you aren't going to be able to actually, cover them and check them off, do you want to switch?
Yeah, I know. And it's always things like free active direct debits. They need to be active. They need to be like things that you're regularly paying for. And also a lot of the switch offers we see are for packaged bank accounts with fees. And that's great if they have perks that you're going to use.
In that case, did you say that you would actually get the fee taken off if you met certain criteria?
So with Club Lloyd's, that has a £3 monthly fee, but if you pay £2,000 in a month, that fee's waived. But you need to make sure you're paying in that much. But it also has 2 packaged accounts as well. So it has like the basic Club Lloyd's and then the Club Lloyd's Silver and the Club Lloyd's Platinum. Then they're packaged accounts. So they have all these benefits like travel insurance, like mobile phone insurance, the type of things you get with these packaged accounts. But if you're not going to use them, if you're happy with your breakdown provider, don't need mobile phone insurance, like, is it worth you paying, like one of them, I think the Platinum account has like a £22 monthly fee.
Wow.
Some of these monthly fees can be a lot, and it's like, okay, you're going to get some cash for switching, which probably would cover your monthly fee for a couple of months, but you're still going to have to keep paying for that after. So if you're not really going to get the benefits of that account, there's really no point switching, I think. And also, even with, we were just talking about that small print, the cooperative bank deal was £75 a switch, but then to get your £25 a month for 3 months, there was extra things you had to do, which I don't think were that hard, like making 10 card transactions and depositing £1,000 a month, but there's still like extra things that you know, they're not going to give you £150 up front. They're going to say, have £75
they're kind of making it a bit difficult for you to use that account as a mule account.
Yeah,
they want this to be an account you actually use, not one that just does the switching every
TSB
hour.
also usually has a similar one as well, where you're getting an upfront bonus, but then you're having to do things each month to get extra money. I feel like they're all trying to do that now to stop you like switching and then just never using the account.
Because they've listened to this podcast and heard what people are doing.
I don't think it's going to stop anyone. They'll just come up with another method to get around it. But yeah, it's important to not pay subscriptions and fees that are unnecessary and that you are paying for thinking that you're beating them, but really they are winning against you.
Like you're going to open that account and you're going to pay that monthly fee in it. I don't have a package bank account. I don't at this minute think I would get the benefits of one, like use all the perks. And we have like plenty of advice on like packaged bank accounts we recommend. But with these fees, it's like, don't just be tempted by the cash because you want to like really make the most of the actual account that you need to switch to. I think Santander, like some of their accounts have a fee as well, some of their cashback accounts, and they often come up in the switching roundups.
Well, I think we've been very precautious in the second half of the show. I mean, final advice then for our listeners. I still feel like this is something I would recommend to a friend. I mean, are you in a similar position?
Absolutely. I would always say, like, I'll go back to what I said at the beginning. Have zero loyalty to your bank account. I'm sorry to my current bank providers if they're sitting there saying, hey, we really like you. But they don't know who I am.
Favourite.
Yeah, exactly. They've got no idea who I am. I'm just another customer to them. At the end of the day, switch if it makes sense. If you're not too happy with your current provider, go on Which, check out the best ones, the ones that they recommend. Absolutely take advantage and get that cash incentive as well. Make sure you've read the T's and C's. Go across, get some extra cash, have a much better banking experience and be happy. And if you want to go down the mule route, not something I would do, but go for it and make even more cash along that line. But absolutely, the current account switch service has made it easier than ever to do this. Like it is, I can't even explain to you how simple it is. You do none of the work and everything just appears in that new bank account. So I would say there are zero excuses to stay with a poor bank anymore in 2025.
Yeah, I'd also recommend it. For me, I don't think I'm ever going to be like switching my main account, but I would definitely recommend like having like this account you don't mind switching. But for anyone else, I'd say, yeah, go for it, especially if you really think that provider, you're going to get something out of that provider, you're happy with the bank, you think that it's going to suit your lifestyle. And, you know, it's great, isn't it? It'd be great if you could get some like £200 cash, which we were seeing I think last year they were doing some of these deals up to like £200. I mean, that would be great. And they will pay usually like within the month as well, usually really quick. So that could definitely give you, you know, it's always like a tip that we love to recommend when we like talk about like easy wins. So we like making some extra cash. It is a really good tip. Just make sure that that's right for you.
Always leaving on a cautious note, but I love it. Well, thank you both so much for joining us today. It's been great to have you on the show, so thank you very much.
Thank you.
Thank you very much.
Well, a huge thank you to Grace and Gabriel for coming on the show today and to you for listening to this week's episode of the Which Money podcast. If you enjoyed today's show, please do hit subscribe to make sure you catch our new episodes as soon as they drop. For daily money news and advice, you can find us on social media at Which Money and online at which.co.uk/money. And we also have a free money newsletter, which is delivered to your inbox every Monday. To sign up, visit which.co.uk/money newsletter. This episode of the Which Money podcast was presented by me, Lucia Ariano, produced by James Rowe and edited by John Weeks.
Every year, Which tests thousands of the products that you rely on every day. And we've been doing it for over 60 years.
Which reviews are 100% impartial. We don't accept freebies from manufacturers and we have no owners, shareholders or government departments to answer to. So our work is on behalf of you, the consumer.
In a world of misleading claims and fake reviews, we test everything, from everyday items to big purchases, so that you don't have to.
We then put them through tests and assessments that go beyond the accepted standard to work out how well these products work for you and what's not worth your money. And a Which membership not only gets you access to our reviews, it also funds our non-profit campaigning work, like getting scam ads banned on social media and ending broadband and mobile mid-contract price hikes.
And right now, podcast listeners can become a Which member for 50% off the usual price by heading to which.co.uk/podcast offer.